Hi, this is Kelly Wright with The Money Show, and I am with Anne Aden, one half of the Aden sisters, the Aden Forecast, two of my favorite people.
Oh,
absolutely. So, 10-year bond hit a 7-year high today.
Yes,
So, if we didn't know any better, it looks like interest rates are going up.
it does indeed.
You take big picture view.
Yes.
So, why don't you help us out? What's going on here?
Well, it's really a very big deal. People don't realize interest rates are probably the most important market in the world. And
Okay.
most people, on the contrary, think they're boring or like they don't care that much, but they affect all of the other markets.
Okay.
So that's why they're so important.
Okay.
And today's action with the 7-year high and the 30-year yield going up as well is probably a good sign. If this continues and they stay above these levels or near these levels, that the 30-some-year downtrend in interest rates is over and they're starting up into a new cyclical rise, which could last a decade or more.
Well, let's think about it. This bull market in bonds and interest rates started in 1982.
Yeah, exactly. 1981. Actually.
1981, okay. So what are we working on here? 91, 1000, 2011, wow.
35 years.
It's
or so.
got to be one of the longest bull markets in history.
Absolutely. And so it's a very big deal that it is reversing if this indeed continues. And if the 30-year yield stays above 3%, which is well above that now,
I was going to say.
it would confirm this reversal. So what does that mean? It doesn't mean interest rates are going to start rising immediately much, much higher. They'll probably slowly move up. It's also important to realize that people don't put this in perspective. Interest rates were at a 5,000-year low. I mean, that's the lowest ever recorded in history.
Lord.
And so, yes, they're coming up, but they're still at low levels.
Right.
So they've got to move up quite a bit before they're going to really seriously affect the stock market, for example.
Okay, so you said the 30-year moved today as well.
Yes.
The 30-year's been kind of stubborn.
A little bit.
A little bit, okay. And we were kind of getting a little flattish there on the yield curve.
Oh,
weren't we?
yes.
Okay. So if we start to steepen, I talk with my hands, folks. So
So do I.
so if we start to see the yield curve steepening, okay, that's a good sign?
Good.
Okay.
It's good for the economy.
Okay.
It's good for the stock market. So yes, it was. They were coming closer together. Now
right.
they're moving, and so that is a good sign. And as long as the economy's looking good, which so far so good, that's good for the stock market. And despite the rising interest rates. Sorry.
No. So the way that I was always taught as a wee lad was that the market is only really worried about two things. One is rapidly rising interest rates,
Right.
and the other is recession.
Exactly.
Now, I'm not an economist, thank God, but I don't see anything that remotely resembles a recession
No.
anytime, okay? And the Fed seems like they want to be slow and steady.
Exactly.
What's going to upset that?
Well, so far, everything seems to be okay, like you say. They're slow and steady, and as long as they do that, there's nothing to get really shook up about. And the economy still looks good, and as long as that's looking good, the leading economic indicators, for example, keeps hitting new highs. That's telling us the no recession, like you just said. So as long as there's no recession in sight, stocks should continue to do well.
The news doesn't get any better than that, folks. I'm with Anne Aden of the Aden Forecast. This is Kelly Wright with The Money Show.